What's the effect of an overdrawn director's loan account from a personal tax point of view? Well, the answer is that if the overdrawn director's loan account is settled and if it is released, then any element that is not paid back to the company where the money is owed, that is then subject to income tax. The director will have to put that on their personal tax return. Now, there was a case just out very recently indeed called Quillam versus HMRC, where the taxpayer appealed against HMRC. The gentleman concerned had an overdrawn director's loan account around about 400 and something £1,000. He paid back about 57 or so £1,000 to the liquidators. And then there was obviously a huge amount, 300 and something thousand, left outstanding. This was never repaid. And what HMRC said was that when the company was then subsequently dissolved, that effectively the matter had ceased to be pursued by the liquidator, and as a result, HMRC could then levy income tax on the director personally. And the director said, no, it doesn't work like that. I never actually settled the matter with the liquidator, and the liquidator supported that position. And the interesting feature of the matter was that it went to the tax tribunal, and the tax tribunal agreed with the taxpayer. And the reason why was very simple, that although the company was dissolved, and although there was no further pursuit likely of the unpaid amount of 300 and something £1,000, nevertheless, it was a company debt. In other words, the director owed this to the company. And the matter had not been sorted out. Even when a company is dissolved, it can still be reinstated, and its assets and liabilities are still there. And as a result of that, the tax tribunal said to HMRC, nope, you cannot treat that as a released overdrawn director's loan account balance, and therefore you cannot levy your income tax. This is under section 415 of the Income Other Trading Something or Another Act. But basically, HMRC lost. Having said that, from the point of view of the taxpayer, it's worth considering getting the matter sorted out so you know where you are, because otherwise you've got the question of, is the liquidator going to reinstate the company at some point? I mean, albeit it's a bit unlikely, but nevertheless it's still a distinct possibility as the liquidator made in this particular case, and the matter could be pursued. Or indeed, one of the other creditors could then appoint another liquidator and reinstate the company potentially, and so on. Or does it get released and written off, and then you sort matters out with HMRC in respect of the income tax? Either way, the matter is an issue, and probably in many instances it would be better if it gets sorted out one way or the other. In this particular instance, however, HMRC lost the case. We don't know whether they're going to appeal. The appeal looks a bit of an uphill struggle, given the rationale put forward in the tax tribunal, but you never know. Questions, queries, concerns, give us a shout. We know insolvency inside out.